Hi there, a very good morning and good evening to all of you, depending on wherever you're watching me in the Simply Stocks. And I'm live in this live session with you all, and hopefully, you all are doing well. Today, I would like to talk about the markets, the way it is behaving, especially the broader markets. And we'll talk about a couple of stocks and also answer your queries. So, it will be a short 20-25 minutes, 20-minute session that we'll be having. On Sunday, I'll have a slightly longer session, and on Sunday, I'll discuss about which two stocks I'm investing into as part of a portfolio of a 20-year, you can say, investment for my child's, you can say, education or college education. So I'll discuss about that on Sunday. Today, we'll discuss about the markets. Hi there. Hi, Dilip. Hi, Pratik Bipul. Hi. I hope you all are doing well with your investments and trading. I know that over the last, you can say, couple of months or at least 6 weeks, markets have been range bound and just volatile. Uh, but you are getting pockets of movements in different types of stocks, and probably that is how the markets would be. So let people join in, let more people join in on this Thursday evening. It's extremely cold here in the northern part of India, as you would understand with the way I'm dressed up. I hope those who are in the western and southern areas might not be feeling the same amount of, you can say, freeze as it is here. Apart from that, the weather is fine in the afternoon with the sun out and everything, but it gets extremely chilly past 4 p.m. So that's how it is. So as far as the markets are concerned, so let's just begin with the session. The markets as such have been range bound. So we'll discuss about the markets. One or two stocks I would like to mention, and then we'll answer your queries as well. As far as the markets are concerned, the Nifty is okay. I mean, it's not quite going down at the moment, although the advanced decline ratio is not that great. Uh, Nifty and Sensex are doing well because of the IT. It did well this time around. About few days back, it was because of the bank Nifty that these stocks did well, or the larger indices did well. But that is how it is. But the broader markets is where the pain is. So we saw more than 0.5% cut in small cap and mid cap indexes, and most of the people here, or most of the investors, retail investors, are having those mid and small cap companies. Uh, Even if you have the best of the mid cap companies, you're feeling the pain and the portfolio is getting hurt. I have an airy feeling that we are into that phase that we were in, say, 3 years back, when in 2018 and 19, nothing moved actually for 2 years. Actually, from 2018 till 2020 March, everything collapsed. So 2.5 years, or around 27 months of no performance whatsoever in mid and small cap. We could be in the middle of that range, because from April onwards, this selling of FIIs have begun, and it has been going relentlessly till December. I will not be surprised if that continues throughout in next year. So in my opinion, next year could be difficult. I thought that December could be big, and that's what I mentioned in November, that after a correction and a bottom is made, I think December will see a mega reversal, and we could see new highs by early January or mid January, and then another correction. But here, what it seems is uh, the Nifty might have its own course and the way it is doing, but mid and small cap may just continue to drag over the next 6-8 months. Why I believe that, there are two or three reasons for that, fundamental reasons for that. One is that, then I'll discuss about technicals as well, but one is that the Fed meet, in that they announced that it is going to be a taper, and there will be interest rate hikes. And as I understand, there will be 8 hikes in the next 6 hikes in the next 2 years, 6 hikes, three rate hikes in 2022 and three in 2023. and that means that the interest rates in US are going to go to 1.6%, from near zero at the moment. 0.1% it is at the moment. Second point here is why I believe it could be range bound is that FII, the way they are selling, I don't think it's going to stop in any time very nearby. For this to reverse, it has to be that FIIs come back into the market. Why I say that, in many of the better mid caps or top notch mid caps in real estate, in, you can say, IT, in pharma, there were FIIs who were invested a lot, and they are selling, and they have been selling, and they might just continue to sell. So larger mid caps, which really hold these indices, the mid and small cap indices, they might not perform. So the whole mid cap and small cap universe might not perform that well as they it was doing in the last 18 months. So that's my second point why I believe that things could be difficult going forward. Another point I want to make here, and this is purely technical, is that over the last 2 months, uh, from October end till probably here, so around 6 weeks or so, there have been consistent lower highs, lower lows being made in many of the sectoral indices which were doing well beforehand. You look at IT, you look at realty index, you look at infrastructure, capital good index. Uh, so all these, or you look at consumption, etc., consumer index, these are not doing that well. Yes, stocks are not collapsing, but there is an airy feeling that I'm having is that we may just remain range bound, and individual stocks may perform. So what does a retail investor need to do who is trading, say positionally trading like me? So I trade positionally at the moment, apart from 2 3 stocks that I'm having from a 6 8 10 15 year time frame. I trade positionally from a 4 to 6 months, at maximum 12 months time frame. See, if you are invested in the top-notch companies, best of the best companies in mid-cap IT, best of the best companies in real estate, in consumption, in different sectors of consumers, say you look at something like housing or household products, etc., and you are in the best of the companies there. Uh, you need to be patient, have a deeper stop loss, don't have a stop loss of 8 10%, because that could be hit. But if you are patient and can take a little bit of pain, say 15 18% on your stocks, over 6 8 months, over, say, in the next 4 months, you will get opportunities to make 25 30% and exit. So look for making 28 30 35% in those stocks, and exit those stocks, keep in cash, and then try to dive into the market again when major corrections happen. I think over the next 12 months, we will see very decent corrections in mid and small cap. We are not going to see a smooth rally. That's my point of view. You can definitely have your points here, and I'll be more than happy to read the comments as to what you believe. So that's one thing. And if you are eventually, if you feel that you cannot take 15 17% cut on your stocks at any time, you cannot wait for that. And if you are at par at the moment, you're not making money, you're not losing a lot, or you're making money at the moment, say for 5 10% on your mid cap small cap stocks, better to exit. That would be a better strategy, and then enter when there is complete pandemonium on the screen. So that would be one of that would be a second strategy that you could definitely follow. Another point I want to make here, that if you are invested into stocks, or trading into stocks which have stock specific reasons, so I mentioned some of the stocks here. Maybe some I might be holding at the moment, so that's a disclaimer. But suppose a CDSL, because of the large amount of demat accounts that are being opened up, there's a definite benefit for a CDSL. So you'll see it in the numbers when the December quarter numbers come around, say end of Jan, early Feb. So the stock may continue to perform. Say real estate stocks, top of the tree real estate stocks like Oberoi Realty, etc., Prestige Estate, Godrej Properties, they will continue to perform because real estate is coming out of a 13-year bear market. The top was made in 2008, early 2008, and now we are into 2022, will be into. So 14 years of bear market that sector has seen. So if you think that it's going to just end at this point of time, the rally, I don't think so. I think if you can hold those stocks for 4 to 6 months, you'll make good amount of money. I mean, that sector should perform because of the way the government is performing. Government is performing on the ground and spending on the ground. Third thing is, yes, real estate sector may have some kind of headwinds with interest rates going up here in India as well. Third point here I want to make, or third sector here, if you are into mid cap IT, that are the stocks are expensive, but they are producing very good numbers. Yes, they might not perform for the next 1 month, 1.5, 2 months, but over 4 to 6 months, you will get 20 to 30% upside. So again, you need to take the pain over the next say 1 month or so in order to make money over the next 4 to 6 months. That's my call in these type of sectors. But if you are into stocks which have no trigger of their own, then it is extremely difficult to make money. You have to understand then how your portfolio is built up and how it is. Uh, and once you do that, you'll be able to understand as to which stocks you need to exit right now. Because I think in the mid and small cap arena at the moment, I might be wrong, but at this point of time, we could be entering and not ending, but entering into a phase of the next 6 8 months where secular uptrend in the mid and small cap arena doesn't look like happening. So that's my call. All right. So, second thing I want to talk about is why the markets, I believe, mid and small cap may not perform. So that's two reasons I gave. So reason that I forgot is interest rate hikes here in India, which is very much possible next 1 year, at least two hikes in the next 1 year, maybe three, and that is going to affect mid and small cap. Because if there is interest rate hike happening, then many of the retailers will go away and look to get into other safer options, uh, because they might think that the cycle is turning. So the pendulum always swings. At this point of time, over the last 1.5 years, we've enjoyed very low interest rates, but now things are changing completely. So the markets may not behave secularly that well. That is another reason. This is the third reason why I believe the markets may not behave very well. Okay. Uh, One of the stocks that I want to talk to you about, which I feel is at very attractive levels at the moment, and uh, yes, it has given pain to you can say investors, traders who have got in the last 1 month or so, is Somani Home Innovation. So this is a stock that went to 380 just recently, and now at 440, it has recovered very smartly. I feel that over the next 2 years, over the next 18 to 24 months, it is a doubler. In my opinion, the way the company is performing, the way the numbers are coming in, I believe Somani Home Innovation currently with 26 rupees of EPS expected next year. Uh, it is trading at very, very interesting valuations. In fact, around 16, 17 times earnings. uh, Clearly it should trade at 35, 40 times earnings because of the kind of earnings expansion that it is having and the kind of, you can say, expansion on the ground that the company is doing. So at this point of time, between 400 to 430, 420, it's a very good accumulation zone. But have a 2 year time frame. As I said, it is a small cap company. Small caps may not perform that well for the next 6 8 months. Have a 2 year view. If you have a 2 year view, one can accumulate this stock. But again, those who have a risk appetite should do that. Otherwise, one should be looking at buying into blue chip, top notch, big companies like Infosys, uh, something like Asian Paints, Pidilite, etc. Those kind of companies should be safer bets over the next 6 months for somebody to park their money and make around 10%, 15% in them. So that's one of the stocks that I wanted to talk. Second is Tata Consumer Limited. I believe Tata Consumer at this point of time, at around 735, 740, 730, whatever price is there, if one has a 18 to 24 months time horizon or even a 1 year time horizon from here, I think at these levels, very attractive. I think the market is giving you a very good opportunity to buy into such kind of a consumer company that is doing extremely well. So these are very decent levels to accumulate something like Tata Consumer at these levels. Yes, it may go down. It has broken the 200 DMA. Technically, it may go down to 680, but for a long-term investor, these are the opportunities that they should look at, that a top-notch company has broken 200 DMA, and there is value in the stock finally. So Tata Consumer is one of the stocks over a 2 year period can perform extremely well, 50 to 60% upside possible in the stock over the next 2 years. I think 40 to 50% very much possible. Again, standard disclaimers apply. Kindly do consult your financial advisor before taking any call. But these two stocks look very good on the charts as well as with respect to numbers. Okay, so I'm ready to answer your queries in the next 5 7 minutes. I'll be answering your queries. Kindly use the super chat super sticker feature that will help in grow the channel and help you also ask me questions and eke out answers in greater detail. See, MGL and Gale is good. MGL has disappointed me over the last 1 year, although I have been very bullish about it. So I'm not mincing words at all. So, but I think apart from that, you can look at IGL. So for many months, I've been ignoring IGL. IGL has performed well. Technically speaking, IGL from a short term perspective is a better company to look at. Santosh, DMart is a very good company to invest into at these levels. A disclaimer, I might be having the stock. I think between 4600 to 4800, one can definitely accumulate. Once 4900, 4950 is taken out, we could see a sharp 15-20% up move in DMart. So these are good levels to buy into something like a DMart. See, Colgate is a very good buy at these levels. If you want 14-15% CAGR return, I think Colgate is something that you should be having in your portfolio. It won't give you huge returns, but say 14-15% returns is very much possible. Uh, Nathan, thanks for being a member. All right, please advise on. Just a second. Please advise on Deepak fertilizers. See, if you want to buy into fertilizer or agricultural stocks or agri type stocks, then it's better to buy them uh, by March, around February or March. If you have them, if you have it, hold them till July. I think hold Deepak fertilizers till July. You'll get a rally in between of 20-30%, and then you can exit. It's not an investment bet. I won't suggest you invest into agri theme big time, or invest into such theme which is more cyclical in nature, say a metals or anything of that sort. Okay. See, Lasa and Tubro Infotech for 6 months. I believe 7,500 possible on the stock, even more. I think 15 to 20% upside, very much possible from these levels. 8,000 even possible. Looks very strong on chart. So good levels. These are good levels to buy. For you, I think what you can do is keep a stop loss at 6,000. So a strict stop loss. Remember one thing, that if you're trading, even if you're positionally trading for few months, it's very important and paramount to keep strict stop losses. By that I mean that after closing or whenever you see the stock go down from a stop loss that you have chosen, just exit. Do not expect for the stock to come back. Do not hope for the stock to come back, and just exit. Do not increase your time horizon as well, because this is a very difficult market to deal with at the moment for traders as well as investors. Okay. See, Aarti Industries is good stock. 6 months time frame. If it doesn't break 900, 900 is your line in the sand. So 900 is your stop loss. I think even 1200 possible in the next 6 months on RT Industries. Whirlpool, see, uh, I think there's not a huge corporate issue, but there are skirmishes that are being seen. If you have it, then hold. I think over a period of time, this will mitigate. If you don't have it, avoid unless it comes out with very good numbers. So that's the call on Whirlpool. Mastec looks very attractive at these levels. 2700, looks good level to buy. 2400 should be your stop loss. And over the next 1 year, don't go by 4 6 months, but hold for a year. I think this is going to perform very well. This could be headed to new highs in the next 1 year or so. Camps, I would say, is an avoid, Jeevan. I would not suggest you invest into it. Uh, why? Because technically looks extremely weak. If it crosses 3000, then you can definitely buy into camps. Otherwise, this may head towards 2450, 2400 as well. Okay. Yes, I think at 2400 polycap is a good buy. Depends on your time horizon. If you have a time horizon of more than 6 months, you can definitely buy at 2400. If you have 231 time horizon, we can see 100 rupees less on the stock. Again, your stop loss is 2100. Keep that in mind. Target is 3000 on something like polycap. Why I'm saying a stop loss of 2100 is I see more decline in the mid and small cap, so we could head towards uh, much lesser levels on most of the best, you can say, mid cap companies. Anil, thanks for your contribution. Some media companies like Sun TV and broking company have operating profit margin of 60%, still the share price does not increase much. It's because the profitability is not there. Profitability is more seasonal, Anil. For broking company, the profitability goes a lot up when there is a lot of accounts opening, when there is a lot of trading that is going on. At this point of time, broking companies are doing well. You look at IIFL, you look at Motilal Oswal, you look at other companies that are listed, they are doing very well. If you look at their you can say prices, say 4 5 years back, even when the big bull run started in 2013 August September, broking companies were not doing that great. So they started doing well from 2017 18 type of period. Similarly, you have so it's not something that you can invest onto, or trade a lot, or invest from a 3 4 year time frame. These things change very quickly. Second thing you asked was about the TV companies, or you can say all these media companies, TV18 or Sun TV or other. Again, they'll perform well when there is a lot of advertising. Now the shift is taking place because many of the advertisers are moving towards digital theme, moving towards YouTube channels, moving towards you can say OTT platform. I don't see these TV companies doing extremely well, and apart from, you can say, during elections, or during a lot of, you can say, business activity if take place, or TV18 might do well. So again, no consistent growth is not there. Okay, Nathan, thanks for your contribution. Currently holding IEX with 40% profit. News about more competition now. Should I sell? Wait for some up move. I think an up move towards 275, 280 possible, and then you can probably exit IEX and take your profits. I think if you're making 40%, it's better to take that in this kind of environment of the market. Long term, probably you can buy again because the stock may fall again. So that's the call. Okay. See, Huhtamaki Papers is a good stock to buy, but again, technically it's extremely weak. So I cannot say that you buy and you'll make money immediately. If you have a 3 4 year time frame, if numbers really come in, because I think they made losses last time around, or a quarter back. So it's better to probably wait for the numbers to come in and then get in. Okay. I think Bajaj Finance might have made a bottom at 67, 6,800. These are decent levels to get in. Have a 2 year time frame. I think you could even see 10,000 on the stock. That's my point. I think it could meander between 6,700, 7,000 for a few weeks. But once it makes a move, I think you could see 9,000 very quickly and 10,000, 10,500 over the next 18 months. Okay. See, Kilpest 583, 5 months time frame, hold. I would say hold. A possibility of 530, 520, 530 coming in. And once 520, 510, 520 is taken out with volumes, etc., then you could expect 700. Again, I would say that in such small companies, do not try to trade into it from a 5 6 months point of view. Again, I'm Kilpest. I'm bullish. I see 2,000 on the stock coming soon. Soon, I mean by in the next 2 3 years or so. Root Mobile look good. I think Root Mobile at these levels is attractive. Again, have a longer term time frame. I can't say over 6 months what will happen, but Root Mobile from a long term point of view, investment point of view, these are good levels to get in. HDFC AMC at current levels. See, for a trade, it looks good for 1 year time frame, not for 4 5 years. I would say something like an HDFC AMC. All right, guys. Thank you. Thanks a lot for being online, and we'll be online on Sunday. We'll discuss about what I'm getting into for my child's education, etc. And please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. And support me on Patreon. The link is in the description. You can be a member on YouTube or on Patreon. Thank you.